there are, there are so many coins out there. There's like 6,000 coins. And, you'll probably find 95% of them won't be here or in trading or being used in a meaningful way in 5 years.
Hello, everyone. Allow me to introduce you our guest for today, Phil Blows, who is the co-founder and CEO of AQRU, an app in DeFi that allows you to earn up to 12% on your crypto. Welcome to our show, Phil.
Thanks, Cristina. Great to be here.
I think your story is very interesting, and I would love to define it a little bit. So you are having an extensive fintech experience over 15 years. You were in financial planning, wealth management, trading, and you also wrote a book on personal finances, so the money triangle. And this is great to have as a background for AQRU. And you also have an extensive sales experience, which is even better. But you're a first-time founder. And even so, last year, you founded AQRU, this company that just like runs through all of those milestones that most of the startups would just dream of. And so I was interested to find out, what did you do? If you could, for example, you're a publicly traded company in London today. I mean, wow, under 1 year being in the open. Also, you have 10,000 customers right now in your portfolio, and you are managing 60.5 million pounds under your management. And I would just love to know your story. And if you could just go through the timelines, like, for example, how did you get with this idea? Where and how did you found your co-founders? Also, when the funding came, because you're also a funded company, and how did you create this timelines and timeframes that were so successful until now?
Sure. Yeah, no, I mean, I think I've got a lot of respect for founders who do things in their 20s. But for me, I needed kind of a 16, 17-year career in startups to really gain the skills needed, I think, to build a company. So although it's my first startup, I've worked in several previously and had pretty, I guess, a pretty entrepreneurial roles within other businesses where I've kind of been given a new product or, been charged to basically create a new company within a company. This kind of idea of an intrapreneur. So I've done that several times, which obviously helped kind of with build a cross-functional skill set. I mean, in terms of, I think, when I was looking at setting up the business with my co-founder, there's always been kind of a consistent theme in everything that I've done, which is everyone wants simplicity, and especially in finance, where the concepts, most people perceive them as being complicated and being boring often, which they're probably not wrong. And I think when I looked at when I've looked at all the startups we've done, what it's been doing is taking quite complex financial concepts, simplifying them into really easy to use apps, and then just sort of mass distributing those apps. And the businesses have done well based on the product feedback, or the feedback on the product, and how what kind of pain points it really hits. And it's fair to say in previous startups, the problem I was solving within the area of personal finance wasn't big enough for the company to kind of explode. So I worked for some fairly successful startups, but nothing that kind of exploded out of the gate. So having done that for 15, 17 years, the area that I then looked at, I was getting very involved in crypto, and I could see the cryptocurrency. Whereas I was previously skeptical, there was this kind of emergence of what's called decentralized finance, which is, it's not, most people think of crypto, it's like I buy something, hope it goes up 20 times and then sell it. And that's not what crypto is now about. That's kind of crypto 1.0. Crypto 2.0 is, I own decent crypto assets, Bitcoin, Ethereum, these sorts of big assets, and I use them to generate income for myself. It's because these are productive assets which you can lend and borrow and generate high yields on. And there's also this concept of a cryptocurrency called a stable coin, which is a crypto coin, which its value is pegged to the value of the US dollar. So, as this kind of new market emerged in the world of crypto, I started, managing my own money and sort of friends and family money, and was just, not sort of speculating, looking for huge price increases, but just having very basic kind of lending models where I was generating really high yields for customers. And so that was kind of the MVP, and it didn't need to be anything. I was a big fan, believer in the lean startup. And even I thought to launch that kind of business model, I would need a product, at least a basic product. But it started as an email where, customers and friends and family gave us some cash, and we just told them what the results were every week. And that was it.
When did you start doing this?
So that was kind of in 2020. 2020. And we didn't actually found the company till early 2021. And because it got to the point where getting so many customers, people saying, "Look, just can you do this for me?" That we said, well, we should probably build a platform that makes it very, very simple to do. So, that was where we went and started raising our seed round. And, we could say, look, this is the idea, and this is the traction we've currently got. It's whatever, a couple of $100,000 that people have given us. We're turning new assets away because we're just testing and we want to build a product. And, that just made the early investor conversations so much easier. We've got traction. And zooming out again, if you're going to start a company, you can make your life a lot easier by doing it in a sector that's exploding. And early 2021, there was no hotter sector than crypto. That's where all of the money from investors were going into. It's like, it was crazy. So that means that we were able to sort of ride that wave of it a bit. And, investors were out there looking for good crypto projects to invest into. And we were one of them. In the early 2021, kind of went to my network and sort of angel investors. And, we raised just under $1 million in that first sort of like few months. And, that allowed us to hire the early team. And, I was very, very keen to own the tech from day one. I've seen a lot of companies that have outsourced tech development and have spent 2 years and millions of dollars and haven't really got anywhere. I was fortunate to know a very good developer who joined us as the CTO. And the team he's built, it's just been phenomenal. And I think a lot of the early success, I'd say fire me before you fire our dev team, because they are the real value drivers of our business. They are, they've built a product which would take many other people years, and we've done it in 6 months. So that kind of, very early product development, built a really nice scalable solution, and then got it in the hands of customers really early. So, got loads and loads of feedback about how we could improve it and have that product flywheel just really spinning, where we get feedback from a customer in the morning and we re-release the product in the afternoon. And that means the product is always improving at a really, really high velocity.
Okay, let's stop here a little bit and go back. So what you said until now, that your overnight success started in 2020 when you already was working and wanted to understand, I believe, crypto. So you were an early adopter. And you did this alone, right? And you took your money, your family money, and you needed almost 10 years to just have that feel. You waited for the right timing. So this would be the second part. First, you tested, you had a lean kind of startup. You were also not a founder, an entrepreneur. You were preparing the right timing and the right move when that will come. And this happened last year. So you mentioned the timing aspect as well. Also that you were already pro in crypto, you had the results to show, and this helped with everything. So your timeline just jumped because of this. So investors saw, hey, these are the results, right? This is what I achieved during the last years. And do you want to come on board? And the third thing that you mentioned is technology. So you understood what kind of pain points are in the market. And here I would love to extra ask another question about the differentiator. So, right, the timing was great last year, maybe even 1 year before, but also the space now is very crowded, and it was last year. what was the approach, and what did you find to be the biggest differentiator for AQRU compared to your competitors?
I think with, and one person, we're very lucky to have my co-founder Digby. His background is very much in kind of payments, and part of where a lot of our competitors have struggled is to make it easy to get money onto the platform. It seems really basic, but through his kind of expertise and network, we were able to to launch with kind of a full suite of people being able to give us crypto, but also being able to give us like normal currency as well. So that was a big part of kind of early access. So going back to that, how are we different? It's the simplicity angle. It's like if you go on most kind of crypto platforms, all you see is kind of like charts, flashing lights, people saying, they're trying to encourage you to buy and sell because they make their money every time you buy and sell. And the problem with that is if you keep buying and selling frequently, you invariably lose money. And, given my background, which has always been about kind of trying to improve people's finances, I'm very, very keen that any product that I launch is not, it's improving people's overall wealth. It's not designed just to make us money, which is what a lot of these companies seem to do. So, we're trying to and the product it's very, very simple, and it's sort of designed to make it so people are sort of buying and holding really top quality crypto coins. So we're not putting the latest fad coin onto it. There's really 4 elements on the platform. So, it's about kind of simplifying the whole experience down to, what are the coins that are still going to be here in 5 years? Let's have a long-term mindset to sort of investments that we're doing. And, let's pay market leading interest on those to try and encourage people just to stay put. And not try and encourage that kind of high turnover speculation, which is how investors tend to lose money. So that's probably the main, summarizing, it's like it's simplicity, but it's simplicity by how you fund the account, but simplicity of how you use it as well. We're focused on yield and not exchange, to the extent where customers can buy and sell crypto on our platform, but it's completely free. We don't charge a fee. That's not how we make our money. We make our money by sharing some of the yield that we generate for our customers. And I think that puts us in the same, aligns our interests with those of the customer. So, we're not trying to get them to be, churning their account all day long. We as they make money, so do we.
I think that this term simplicity is very important for other founders, and I would love to learn from your story, because it's obvious that you are almost obsessed about this word, and maybe somewhere on the line you discover that this is also a recipe for success in business. And I would love to understand, how did you find out about this? Why I'm saying that, because many founders are failing exactly on this process. They want to prove before they are ready, before they have any kind of market fit, before they are able to go to investors, that, hey, we can do that. And so they get so in love with their potential product that they want to show too much from the beginning, and they get lost in translation and they fail. So how and when did you learn this lesson, that simplicity is not just good in life, basically, but also in business, and for your success is one of those recipes, ingredients?
I think there was early in my career when there was a trading platform that we were working on, which was like helping investors invest in traditional products, and all we had all day long was people saying, look, we don't want the complexity. Can you just do it for me? I trust you. We've built a relationship. You just do it for me. And that's kind of been everywhere we've gone. It's like, find a trusted source, and then you do it for me. That's kind of what people want in in so many different product types. So I think, when it comes to crypto, it's like, I could go and dive into the world of DeFi, but, I don't have the time to do it. I trust you, AQRU, because you're experts in the space, and you're a reputable business. I prefer it if I can just use your platform to just make sure I'm invested in the best protocols out there, and that's really what we're doing. And I've just seen it too many times, and where people have spent years building a product that no one really wants, and I think you saw it with, there's just loads and loads of examples, and, you see it quite a lot of the time. And so I think it's more just reading on startups, that sort of stuff. It's just, people you just know that's not the way to do it now. It's worth just like faking it almost to have have a product which maybe it's completely manual in the back end, but just so you can get that feedback from early customers and understand, what is the pain point? Do they even want it? And will they pay you money for it? Because, I've seen loads of people who will tell you how much they love the product, but they won't give you any money for it. And so you don't really have a business. So, you need to quickly get to that realization. Will people actually give you money for what you're trying to sell? And, you need to get there in like week one, of your business, if you can, coming up with spending, building a website, all these sorts of things. They're really quick and easy to do. Just like, can't stress it enough. You've got to get to the client as fast as you possibly can. We didn't have a website when we got our first customer. It was, talking to people and having an email service.
And what did they say when they saw that, hey, okay, you provide big yield, but it's only on a couple of coins and not like the vast majority like other platforms?
Yeah. And, for most, and I'd say from the vast majority of investors, that's all they need. I mean, there are so many coins out there. There's like 6,000 coins. And, you'll probably find 95% of them won't be here or in trading or being used in a meaningful way in 5 years. It wouldn't surprise me at all if most of them are gone. So, you need to see them prove. I mean, Bitcoin is, it's almost 15 years old now. It's been around. It's sort of, that's the kind of timeline that that it's begun to prove and build itself out as something that's, a real store of value. And Ethereum has, got a similarly long kind of history to it. Most of the other coins have sort of sprung up in the last three or 4 years. And, their business, they are startup companies themselves that haven't necessarily found traction. So, that's, I think when I'm speaking to the kind of the mass affluent kind of investor class, I'd be saying, look, you want to have a mixed portfolio of Bitcoin, Ethereum, and these stable coins. So effectively you're balancing growth, which is you're hoping Bitcoin and Ethereum are going to appreciate in price in the medium term. And, you're also going to earn a decent yield, which is 7% on those assets, but you're hoping they're going to really appreciate and, see double-digit growth every year. But then you've also got to sort of balance some of the volatility. You've got these investments in these dollar-based stable coins where, the yield is 12%, but the volatility that you're getting in the asset is essentially just that of the US dollar. So, if you're, depending on which country you're in, that's kind of your native currency, and you can, you just earn a high yield. And, that kind of approach is very different to just the mass speculation that you see in crypto, where just trying to punt on the next big thing. For most people, and you'll probably find that portfolio or a mix of that portfolio will outperform the majority of people in the next 5 years who are trying to time the market and jump in and out of it, because we just see that, that trader mentality never works in the medium term.
You just gave a quick lesson about crypto for those who are thinking about investing for a long time, or maybe since yesterday. And so they start to understand that it is a market, and there is more to it than just being a hype right now. So thank you for that. Now back to our timeline. Last year, right? Tell me about the founding group, because you're 3 co-founders. How did you get together?
So it was actually Digby and myself, the other co-founders, and we actually worked together about 15 years ago. I was kind of running trading at a company, and he was running sales. And it was in a fintech business then, sort of around 2008 sort of time. And we just stayed in touch, and we then ended up working together at another business a few years ago. And from there we decided, look, there's we both got a lot of exposure to crypto whilst we were at that business, although that wasn't what the business did. It was a payments company. And we just said, look, this is the hottest area right now. We should be in crypto. If we're not in crypto, we're And we're talking to founders who've been doing this for, you know, a couple of years, and their businesses are worth, you know, hundreds of millions, and they're not necessarily doing anything that we felt we couldn't do ourselves. So we kind of had the blueprints right in front of us to do it. So we just thought, well, you know, let's give it a go. And, you know, we had the idea. We were confident that the idea would get traction quickly. We had a good network of investors that we thought we could approach for sort of early finance, which, you know, turned out to be true, which was good. And yeah, and then very quickly we added Louis, who's our CTO, who's pretty much a co-founder as well. You know, he's helped build the product from scratch, and you know, he's then hired a team. So the second developer on the team was a guy called Gary, who's a phenomenal sort of front end developer. And yeah, the team's gone strength to strength from there. And you know, we're now probably just under 40 people based all around the world. You know, we're onboarding. You know, the growth rates are pretty crazy. We're growing at about 100% a month in terms of our customer acquisition. And yeah, it's kind of the mass scale up time now is where we're at.
Okay, so you formalized what you were doing for a long time now last year together with your first co-founder, and then you went to reach for some funds, and this happened pretty quickly. You received 10 million or something like that, right, in funding?
So we did what's called a SPAC, which one of the things with crypto is one of the things with cryptocurrency is that a lot of people don't know who owns the company. It's not very transparent, these sorts of things. So, you know, you get a lot of credibility when you go public. And, you know, we were approached by an investor who said, look, we've got a listed vehicle with, you know, 10 million pounds of assets in it. You know, and we would be keen that, you know, you basically reverse the company into that structure. And, you know, you effectively run the overall entity. So, you know, that was attractive for, you know, we went from the initial seed raise of sort of 1 million to raising another 10 million effectively. And then also we have that kind of listed vehicle, which is, you know, when we're talking to institutional investors, they're pushing us for, you know, what's on your balance sheet, and also, you know, who owns the firm, what does the kind of the governance structure look like, and we can point to a really, really experienced management team and board of directors, as well as the, you know, the UK listing. So, you know, as a firm, you know, that kind of takes us to another tier that a lot of crypto companies don't have, which is, you know, we're owned by a listed business, and it's, you know, it's the transparency and credibility that comes with that means that investors trust us more.
And this happened before the huge growth in customers, like during the last 4 months. You acquired 10,000, but last year you didn't have a platform and you were like trading for your customers, but in a more old-fashioned way, right?
Yeah, so we didn't really launch the app until December, and you know, but we had it in beta and we're testing it with customers all year. You know, and we were getting loads and loads of feedback from customers the whole year. So, you know, it was really what sort of happened in the last 3 months is where we found the point where product market fit is really strong, and not just like, you know, obviously everyone wants to earn high interest, but you know, what we're really testing is throwing as much traffic at our product and seeing what came out. You know, are people signing up to the sign in, or doing all of the usual analytics around the user journey to make sure that, you know, we are confident that the customers are kind of doing what we think they should do on each screen. And once we had that in place, there's okay, well, startup phase is now over. Now it's scale up phase. So that's where you can really turn on the marketing. You know, and turning up the spend that you're putting out there. You're kind of out of lean startup mode and into kind of blitz scaling mode, which is, you know, where you're just like putting, you know, petrol on a fire to try and make it grow as quickly as we can. And that's where we're at now. It's all about just managing that growth, because, you know, it's a really, really exciting patch that we're in currently.
The investors came before your platform?
So investors, we had sort of a beta platform that we built, and, you know, it was very, very basic, but it sort of did what it, you know, it was, you know, the front end looked pretty impressive, but absolutely everything in the back end was me updating a spreadsheet effectively, or, you know, Google spreadsheet. So you can imagine, you know, there was a lot of just manual data entry. So none of the APIs were plugged in, anything like that. So great looking front end, but all smoke and mirrors in front of effectively a spreadsheet. And then we tossed that in the bin and started and actually built the product properly after we had some, so the customers going.
So that's why you were saying from PowerPoint to a 30 million pounds public company in 10 months, right? But this PowerPoint is your spreadsheet, basically.
Exactly. Okay. So I mean, yeah, it was. I mean, it was a very, very early kind of version of the product, which was, it was. It didn't. It's amazing how quickly, the version 2 kind of got built, but version 1 was it was very useful for those early investor conversations.
So we have a couple of secret ingredients for your success already, but I think now we can introduce a new one. And I would love to ask you about networking and connections, because it's obviously one of your ingredients for this to achieve these milestones. Tell me about your networking and skills, and also how did you approach this from a long-term point of view? Because it's obvious you came with your own network and maybe your co-founders as well.
Yeah, and I think it's, both Digby and myself have, I think at any company I've worked for, I've really tried to work very, very hard and, be a very good employee. I know that sounds bad. And I'll also caveat that with, I got progressive, as I was approaching starting a business, I think I got progressively more difficult to manage because I was frustrated as an employee. It's part of what, another part of why I started something.
Your entrepreneurial self started to came to life, right?
Yeah, I was just annoying everyone, I think was probably it. But, everyone knew that I was, fully committed, really hard worker. And that meant that like anyone I've worked with over the last 15 years knows that I'm, I don't mess around, that I'm a good, I'm worth backing. And, it's building a reputation. And I think, it's then just making sure that, I think socially I've kind of kept in touch with a lot of people over the, who maybe I'm not working with anymore, but really it was then a case of, I probably knew 25 investors, and 10% of them might invest in our business. However, those 25 investors probably each know 25 investors. So the kind of once removed network is actually where I think the real strength was. So I had, and going to these people, giving them the pitch and them saying, well, no, I don't think this is for me, for whatever reason. And then it's just like, okay, well, who are the 5 people you can introduce me to that are interested in this idea? And, we've got interest in the space. And, without fail, we got introduced to people. So, the seed round investors were, I don't know, we had about 20 or so early investors in the business. And then, when we went public, the contact, the person that we, that we used to sort of, do the deal with for that vehicle, was a contact of a contact. So again, it just so happened that the person I knew was having a conversation about crypto with someone and he was saying, oh, I'm looking to invest in something in this space. And the person just said, well, as it would happen, I know someone, and put us in touch. So yeah, I think it's just, building a reputation over a long period of time and, keeping it warm by just, being sociable as you will, and trying to stay in touch with people. And then, trying to be reciprocal, give people some value back when they, whenever you can, and help them out when you can, and they're more likely to help you.
It's so funny, because I'm thinking usually I would approach our conversation in different stages. Like one of the topics I like to approach is about funding and how your startup changes after you receive the funds, because now you have a board and the communication, everything changes. It's not just for you and your co-founder or co-founders, but the strategy needs to be different because now you are working for more people who are stakeholders in your company. In your case, everything just jumped. You don't have enough time, to just accustom to all of these phases. So this is funny to me. It intrigues me how to put the questions. But before that, I would love to also start with your employees, because you have a team around, you mentioned 15 people. And it's the first time when, okay, you manage people as an executive before in fintech, but now are your people, basically. How did the dynamic change from an executive to a founder?
Yeah, I think I've probably found it easier, if I'm honest. And I say we're probably approaching 40 people now, in
14,
terms of the
okay.
numbers. But yeah, I probably found it easier because I guess I get to set the culture early. So, the culture is pretty closely aligned with the founding team. I say pretty closely. The culture is the founding team, and it's so we are, the way we run the business is quite different from a lot of other companies I've worked with, which is, like the policies are, we try to treat everyone like adults, which often you don't get treated like at a company. So, you work when you want, where you want, and you have as much holiday as you want. That's kind of the underlying policy. The expenses policy is spend it like it's your own money. That's the extent of it. And, I think what we then have is this very, very flexible culture, but, we just hire people who are really driven and, set them clear goals. We don't kind of, we're not prescriptive about how they achieve those goals, but we hire intelligent people, say, this is what the business needs to achieve. We'll give you all the support you want, but, we want you to think creatively about how to solve these problems and hit these targets. And I think that puts a lot of pressure on management to really, be clear about what people need to, the goals that the business has and why they have them. But really, it's kind of, I like to think we're kind of managing a team of superstars, really. It's like managing a, professional sports team. Like there's nothing I can tell our CTO that's really that useful because he's wildly smarter than I am, I'm sure. So it's kind of like, really, I just need to show him the vision of the business and allow him to sort of, create as he does. And it's the same for everything from our customer service team, who are just brilliant at dealing with people, so much better than I am. And, to every area of the business. And compliance is, our compliance team it's an area that's always difficult from a sales business development perspective, but our compliance team has been exceptional from day one. So, I think there's some really good stuff there.
Who does the hiring?
I think everyone really pitches in, but, myself and my co-founder Digby have kind of final say for, for the final, with anyone, because it's so important. Even at 40 people, one bad hire can still impact the whole business.
You have a very open culture there, I see, where everyone is in charge until at some point. And you are also a remote company, right?
Yeah, so we're remote. We have an office in Sofia in Bulgaria where our customer service team sit, which is kind of a fairly flexible office, we're like a WeWork type structure. But generally, the idea is we work globally and people work wherever they want. So, we have people who spend a couple of weeks a month in the UK and others abroad, just so, in Cyprus, so they can enjoy nice weather consistently. Yeah, really flexible. We've just got the one office for the customer service team because I think it's important there's certain teams to be together, and you can have a bad day with customers where you've got several customers kind of beating you up, and it's always good to have a team around you when that happens. So yeah, that's our only real physical presence.
So it's a Europe concentration here to be closer to get together, right?
Yeah, and yeah, we've got people in Australia, Canada, Argentina, Sweden, Middle East.
What's your favorite communication channel with all of this?
We generally use sort of for video, it's like Zoom, but Slack is where the business really, so we've built our kind of, our product around Slack. So, when there's any kind of, any customer deposits and withdrawals, Slack notifications, it's a really useful tool that we bring people into. But crypto has a lot of different mechanisms, so like WhatsApp and Telegram, but I try to keep everything confined to Slack, really. But invariably we have to use a few other things as well.
I'm curious, did you concentrated on people who know about crypto, or you also brought in people who had no idea about it before?
I mean, I think the operational team were all crypto savvy. The development team knew nothing about crypto, and even the investment team knew nothing about crypto. Some of the early investors, like top investment hires that we made, they didn't. They came from traditional finance and highly quantitative backgrounds. And it comes back to just hiring super smart people and sort of educating them in crypto, and then very quickly they are doing a better job of it than I possibly could. Because this is their kind of skill set.
Okay, so let's go next to the investing round. You had two, you had the seed, and then you brought in even more money. I'm curious if you saw any kind of changes before and after, how the dynamic changed now that you have investors on your table and you need to manage much more, let's say, politics inside your company. How do you do that?
For the first, I think the seed investors, the first rounds, we've always tried to communicate a lot with investors. So a monthly update email was all I was really speaking to kind of our early seed round investors on. And the feedback was generally very good, and they were very, very supportive. Then really the big deal is what we're in now as a listed company. And I think we're very, very fortunate that we've inherited a very talented board and a very supportive board. They've bought into our vision of what we want the business to be and what we want it to do. So again, we have a monthly board meeting, and we're in regular contact with kind of the other sort of non-exec directors and operational directors. But they're really there to sort of course adjust. So if they feel we're not quite going in the right direction as a business, then they'll give feedback. But so far they've been very happy with what we've done. It's not really been needed.
I would be very interested now about your retrospect. You have almost 1 year as a founder, and you learned a lot of lessons. If you go through this last period, what do you found to be the most challenging for you? Maybe 2-3 things you found, and also what do you intend to do differently from now on with your earned experience as a founder?
I think one of the hardest areas early on was marketing. Getting a brand, some of the basic stuff, you can spend a huge amount of money on agencies, and especially when you're lean, trying to be lean and you haven't got much money in the bank. It's something to be really, really careful on. And I think, at the early sort of marketing efforts we made, we weren't data driven enough. Whereas now we have several sort of agencies that we deal with, but we've got them all under control because we've got very, very clear metrics that we can hold them to. And, we know what good looks like. We know what bad is. Everyone's on the same page. And, when something isn't working, we stop doing it. And I think that's, as a very early company, that was quite hard to do. We had trusted suppliers who maybe weren't performing so well, but we kind of stuck with them despite that. Whereas now, we're not heartless, and, we give everyone every opportunity, but we have very, very hard and fast data, data points for every consultant that we use. And if we're not hitting those milestones, then we cut it. Simple as that. So that's probably been the biggest thing I'd change, is just being more data driven earlier. And what we're going to do differently is we're going to continue to, as we grow and we scale, we get a lot better picture of what the key data points are. So making sure we concentrate on that is now the most important thing.
And is there something you could say to a first-time founder who are thinking about starting a business now, or being in its first year, something that you discovered as being very, very important?
I mean, it's tough. I mean, first-time founders, I think, I tried to sort of like do a load of like really easy, like kind of startups previously, like Amazon selling and, launching products and stuff like that as kind of side hustles. And like none of it worked because none of it really played to my skill set. So I think if I'm, what kind of it's very difficult to be to be like top 1% at just one thing. But if you can take several things and mix them all together, several different skills, I think people need to look at what are their skill sets. And if you combine them, you can get something at the end where, in that specific combination, you are top one, you are like uniquely qualified to launch a business that does that. So I think, with kind of like general asset management background, fintech development expertise, and kind of like, a bit of marketing background, that's sort of several things that meant that I was quite well placed to launch a crypto business, and then combine my co-founder, which is kind of who's like an expert in operations and payments. And between us, like, we've got like all the necessary skill sets to actually launch something that's quite difficult to do. So when you aim, and I think that was also the other thing when previously I tried to look for these really easy things to launch. And this is by far the hardest idea we had to launch, but it also means there's very little, there's not actually as much competition. There's millions of Amazon sellers who are really good at marketing, and, it's highly competitive, and it's not that many people starting crypto investment businesses. And, because the barriers to entry are huge. So it's kind of the competition is that much less. So yeah, I guess it's that's pretty unhelpful advice, I'd probably say so far. But I mean, it's I think yeah, don't be afraid to launch a business that's huge, that has a really massive, it has quite a high barrier to entry and these sorts of things. If you can find and work out a way of launching and testing it, quickly and easily, which is like how we did with our kind of email service. If you could find something with, then you'll sort of slowly build traction. Because it's strange looking back and saying, we've built, a global business in sort of 14 months, and we're signing, which is growing, with I say 100% a month. So it's, but it all started with lots of baby steps. So yeah, I'm not sure if that's useful or not.
Well, I hope it will be for as many founders as possible, or also executives who think to become first-time founders, like in your case. Now, I love the term recipe and ingredients, because I believe that every successful business has a more or less complex type of recipe, and each company is unique. So in your case, after having such a huge jump from the beginning till now, but yes, we know already that your overnight success was not exactly an overnight success, but we understand how things unfolded. If you would need to find a recipe for your success until now during this last year, that's compounded only in 3 ingredients, what would be those 3?
I mean, so one ingredient's got to be the simplicity of the approach. Customer centric is the second one. I think, yeah, and then culture. I think, we've got a really good company culture, which people enjoy working in. So I think that's super important. So probably those 3, I'd say.
Interesting. My last question to you: what's next for AQRU?
I believe AQRU is $1 billion company, and I want to scale the business to be $1 billion company, serving millions of customers, and really is the market leader in generating yield on digital assets. And I can't. There's nothing. We've got a clear path to doing that. It's just about execution now. So, we're seeing that scale happening, and, it's just a case now of, doing more of what we've been doing and doing it well and keeping the customer at the heart of everything that we do. And I think, we've got a clear path. We're on the rails to get there. So that's the number 1 focus.
Great. Now I have an extra question because of your answer. So you intend to become a unicorn soon enough, I suppose. How do you intend to manage the risks that are in crypto? Because there will be regulations, a lot of changes happened during the last year, and you just don't know. There could happen things that are not under your control. So yeah. What's the risk management you consider to also to reach your goal?
I mean, there's regular there's multiple risks that face our business and kind of every business, and regulation. It's an emerging asset class. Regulation's a big part of it. I mean, we actually see regulation as an opportunity because unregulated crypto is a lot smaller in size than regulated crypto, and I think you'll see. So if crypto becomes regulated, every institution on the planet is going to suddenly start piling into it because that's probably the main thing that's holding them back at the moment, which will increase competition and things like that. But if we can build a massive business, before that kind of event happens, and in the meantime, we are building up a global regulatory footprint in our own right. We are, liaising with every regulator we need to operate. We're in a very good position. We've got a massive head start on people at that point. So, I think there's a lot of risks, but again, having we can't predict the future, but we can certainly look and see what we think is the direction of travel, and going towards a more regulated crypto environment is one that we think is a good idea. So I think we just got to make sure we've got a great compliance team. We're constantly onboarding and creating entities in other jurisdictions to sort of grow that local regulatory presence in each of our key locations. And just got to continue to do that.
This was a great conversation, Phil. Thank you. I believe that many people can find gems in it if they listen carefully. And let me wish you a lot of success to reach that unicorn status soon enough, as you wish, and also bring a lot of money to your customers and make everyone happy.
Exactly. Thanks so much, Cristina. Appreciate it.
Thank you.